That's my accounting statement and definition. 1. Asset. Asset is an economic resource, anything tangible or intangible that can be owned or controlled to produce value and that is held by a company to produce positive economy. Value is an asset. 2. Current asset. Current assets are cash and other assets expected to be converted to cash or consumed either in a year or in the operating cycle, or whichever is longer, without starting the normal operation of a business. 3. Intangible asset is intangible asset like of a bicycle, substance, and usually are very hard to evaluate. 4. Tangible assets are those that have a physical substance, such as currencies, buildings, real estate, vehicle, inventories, equipment, art collection, precious metals, rare earth metals, industrial metals, and carbs. 5. Cash on hand is cash on hand is the total amount of any accessible cash. 6. Petty cash is the money that you keep on hand to make small payments where you don't want to use a check or credit card. 7. Cash at bank is the total amount of money held at bank by an individual or company. 8. Account receivable. Account receivable is a legally enforceable claim for payment held by a business for goods supplied and or service rendered that customers or clients have ordered but not paid for. 9. Allowance for doubtful debt is a balance sheet account that reduces the reported amount of accounting receivable. 10. Interest receivable is an item under current asset that represent the amount of interest that was reported as earned but has yet to be received as at the date of the balance sheet. 11. Notes receivable is an asset of a company, bank, or other organization that holds a written promissory note from another party. 12. Merchandise inventory is a good that a company purchases and plans to resell to customers at a higher price. 13 marketable securities are non-cash financial investment held by an organization that are easily convertible into cash at a reasonable market value. 14. Supplies is a current asset representing the cost of supplies on hand at a point in time. 15. Prepaid rent is a current asset. Account the report the amount of future rent expense that was paid in advance of the rental period. Okay, next. 16. Prepared advertising is a current asset that reports the amount paid for advertising that has not yet taken place. 17. Prepared insurance is the portion of an insurance premium that has been paid in advance and has not expired as of the date of the balance sheet. 18. Long-term investment is the balance sheet classification that is reported immediately after current asset and before property, plant, and equipment. 19. Investment in bond is investment in investment bond are life insurance policies where you invest a lump sum in a variety of available funds. 20. Investment common stock is a form of corporate equity ownership, a type of a security. Okay. 21. Temporary investment is a current asset account which contains the amount of investment that can and will be sold in the near future. 22. Fixed asset. Fixed asset is also referred to as PPA or property, plant, and equipment. These are purchased for continued and long-term use in earning profit. 23. Equipment. Equipment is non-current or long-term asset account which reports the cost of the equipment. 24. Accumulated depreciation of equipment is the contra asset account which accumulates the amount of depreciation expense taken on equipment since the equipment was acquired. 25. Building is non-current or long-term asset account which show the cost of a building or excluding the cost of the land. Yes. Okay. 26. 26. Accumulated depreciation of building. This is a contra long-term asset account which is credit for the depreciation associated with buildings. Okay, thank you. Hey guys, I want to continue my 200 accounting statement and definition. Check it out. 27. 27. Land is a long-term asset account that reports that cost the cost of real property exclusive of the cost of any constructed asset on the property. 28. Machines and equipment have company to use in production, processing, manufacturing. 29. Accumulated depreciation of machines. The contra asset account which accumulates the amount of depreciation expense taken on machine since the machine was acquired. 30. Motor vehicle is a long-term asset account that report a company's cost of automobiles, truck, etc. The account is reported under the balance sheet classification property, plant and equipment. 30. Accumulated depreciation of motor vehicle. The contra asset account which accumulated the amount of depreciation expense taken on motor vehicle since the motor vehicle was acquired. Okay. 32. Accumulated is a long-term contra asset account or an asset account with a credit balance sheet that is reported on the balance sheet under the heading property, plant and equipment. 30. Value added tax or VAT-in is a type of tax in which the tax is applied to a product whenever any value is added, including in the product's production and final stage. Oh my god. Yes. 34. Goodwill. Goodwill is a long-term or non-current asset categorized as an intangible asset. Goodwill arises when a company acquires another entire business. 35. Franchise is the license to make or sell a product under certain conditions granted by the owner of this right. In other words, franchise is the right to product a licensed product by the owner of the license. 36. Leasing is a legal agreement to pay rent to the lessor for a stated period of time. 37. Liabilities also include amount received in advance for a future sale or for a future service to be performed. 38. Account payable is liability to a creditor carried on open account, usually for purchase of goods and service. 39. Bank payable is working capital loan from the bank for business expansion. 40. Bond payable is debt caused by companies use I use I using I using and selling security. 41. Interest payable is interest earned but not yet withdrawn, or interest due but not yet paid. 42. Mortgage payable is liability account whose balance sheet is the unpaid principal balance as of the balance sheet date. 43. Notes payable is a liability in writing that promise to pay a specific amount of money at future date or on demand. Salaries payable is the current liability account which report the amount of salaries earned by a company employees but which have not yet been paid by the company. 45. Tax payable is a liability account that reports the amount of tax that a company owes as of the balance sheet date. 46. Accrued expense are expenses that have occurred but are not yet recorded through the normal processing of transaction. 47. Unearned rent is the same thing as deferred revenue in accounting. You name it, revenue is a liability. 48. Unearned revenue is a liability account that reports amounts received in advance of providing goods or service. 49. Value added tax. 49. Value added tax or VAT out is VAT paid when the PFM sells taxable goods or taxable service. Revenue is an obligation. 50. Is equity. Is used accounting in several ways. 51. Paid up capital is the amount in a company which is funded by the shareholders. 52. Prive is withdrawing funds by private company owners for personal use that will reduce capital. 53. Drawing is personal collection made by the owner for personal gain. 44. Dividend is a sum of money paid regularly or typically unilaterally by a company to its shareholders out of its profit of reserve itu. 55 income summary is transitional account into which all income statement, revenue, and expense account are transferred at the end of an accounting period. Kayak gitu. 56. Common stock is a security in the form of a charter or certificate that give the holders of proof or right and performance rights in a company. 57. Preferred stock is a type of stocks which may have any combination of features not possessed by common stock, including properties of both an equity and a debt instrument, and is generally considered a hybrid instrument. 58. Revenue is the inflow of research into the enterprise in a period of sale of goods or service. 59. Sales is the activity or business of selling product or service. 60. Sales return is a merchandise that was returned to the seller by customer. 61. Sales discount, a contra revenue account that reports the accounts allowed by the seller if the customer pays the amount out within a specific time period. 62. Commission income refers to fees earned by brokers and agents in making a sale or closing a deal. 63. Consignment income, an arrangement in which goods are left in the possession of another party to sell. 64. Fair income. Fair income is inner income from joint venture, income from enterprise, interest income. 65. Fees inert, a revenue account that is the revenue section at the top of the income statement. It contains the fee revenue earned during a reporting period. 66. Income from joint venture, cooperation of several parties to organize joint ventures within a certain time frame. 67. Interest income. Interest income is the revenue earned by a lender for use of his funds or an investor on their investment over a period of time. 68. Other income. Income derived from transaction no invoiced, no not invoiced in daily operation of a business. 69. Carefully income is a present which refers to payment of a tenants for taxes and insurance. 17. Rent income refers to the full payment of rent and related payments you receive when you rent out your property. 71. Purchase. Purchase means to take possession of a given asset, property, item or right by paying a determinate amount of money for the transaction to be completed successfully. 72. Purchase return occurs when a buyer returns merchandise that it has purchased from a supplier. 3. Purchase discount is a deduction that may be available to the production of the goods sold by a company. 74. Cost of goods sold are the direct costs attributable to the production of the goods sold by a company. 75. Expense is a cost of occurs as part of a company's operating activities during a specific accounting period. 76. Advertising expense is the income statement account which report the dollars amount of ads run during the period shown in the income statement. 77. Telephone is the cost of telephone service that was used during the period shown on the income statement. 78. 78. Store supplies expense report the amount of the supplies that were used during the time interval indicated in the heading of the income statement. 79. Bad debt expense represent the amount of uncollectible account receivable that occurs in a given period. 80. Depreciation expense is the allocated portion of the cost of a company's fixed asset. 81. Insurance expense is the cost of insurance that has been incurred, has expired, or has been used of during the current of accounting period for the non-manufacturing function of a business. 82. Prepared expense costs incurred to acquire economically useful goods or services that are expected to be consumed in the revenue in earning process within the operating cycle. 83. Rent expense is the amount to be paid on a lease agreement. The amount is usually based on per month basis. 64. Elec- electricity expense is the cost consumed in reporting period related to the following types of expenditures. Uh, Active 5. Wages and salaries expense are used to record gross wages and salaries earned by employees during the accounting period. 66, 86, 86. Other operating expense are the expense you incur in the everyday running of your business. 87. Office salaries expense is the fixed pay earned employees for office. 88. Store salaries expense in the fixed pay earned employees for store. 89. Salesman salaries expense. Any cost incurred by the sales department. 90. Supplies expense refers the cost of consumables used during reporting period. 91. Office supplies expense is what a company purchases office supplies. The transaction must be recorded in the amount on the balance sheet. 93. Interest expense is non-operating expense shown on the income statement. 94. Miscellaneous expense is often a general ledger account in which very small amounts are recorded. 95. Motor vehicle expense recording motor vehicle expense for vehicle used to earn business income. 96. Utilities expense is the cost consumed in reporting period related to the following types of expenditures. 97. Bank service charge expense is this an administrative expense which refers the fees incurred by 97. Bank service charge expense is this an administrative expense which reports the fees incurred by company for the expense associated with its checking account transaction. 98. Income tax expense is the amount of expense that a business recognized in an accounting period for the government tax related to its taxable profit. 99. Depreciation expense is the allocated portion of the cost of a company fixed asset that is appropriated income statement. 100. Freight in the cost shipping cost to be paid by the buyer of merchandise purchased when the terms are FOB shipping point. 101. Freight out is cost paid for the transportation of goods when shipped to a customer. 102. Accountant is person skilled in the recording and reporting of financial. 103. Accounting. Accounting is recording and reporting of financial transactions, including the origination, the transaction, its recognition, processing, and summarization in the financial statement. 104. Account payable subsidiary ledger is financial record of an individual account payable in which entries can be made daily. 105. Accrual is the recognition of an expense or revenue that has occurred but has not yet been recorded. 106. Accrual basis is method of accounting that recognizes revenue when earned rather than when collected. 107. Accrued expense, an expense that has occurred but is not recognized in the accounts. 108. Adjusting journal entry, an accounting entry made into a subsidiary ledger called the general journal to account of a period change. 109. Auditor is person who audits financial accounts and record kept by others. 110. Bank reconciliation is a process by which an accountant determines whether and why there is a difference between the balance sheet shown on the bank statements and the balances and the balance of the cash accounting in the firm's general ledger. 111. Bookkeeping is process recording financial transaction and keeping financial record. 112. Cash flow is net of cash receipts and cash disbursements relating to a particular activity during a specific accounting period. 113. Cash ratio is ratio of cash and marketable securities to current liabilities. 114. Cost of goods sold is figure representing the cost of buying raw materials and producing finished goods. Credit is entry on the right side of a double entries bookkeeping system that represent the reduction of an asset or expense or the addition to a liability or revenue. 116. Creditor is party that loans money or other asset to another party. 17. Current asset that one can reasonably expect to convert into cash, sell, or consume in operation within a single operating cycle or within a year is more than one cycle is complete each year. 118 current liability is obligation whose liquidation is expected to require the use of existing resources classified as current asset or the creation of other current liabilities. 119 debit is entry on left side of a double entry bookkeeping system that represent of audition of an asset or expense or the reduction to a liability or revenue. 120 defalcation is to misuse or embezzle funds. Deflation is decline in the prices of goods and services. Discount reduction from the full amount of a price or debt. Dividends is the distribution of earnings to owners of a corporation in cash, other asset of the corporation, or the corporation's capital stock. Finance, the science of the management of money and other financial assets. Tadi apa? Financial statement is presentation of financial data including balance sheet, income statement, and statement of cash flow or any supporting statement that is intended to communicate an entity's financial position at a point in time and result of operation for a period then ended. 126 FIFO is accounting method of valuing inventory under which the cost of the first goods acquired are the first cost charged to expense, commonly known as FIFO. Fixed asset is cost the remain constant within a definite range of activity volume or time period. If OB is indicates the point at which title to goods passes. FOB destination is a shipping term that means that the seller bears transportation cost to the place of delivery. FOB shipping point is a shipping term that means that buyer bears transportation cost from the point of origin. Foreign exchange is instrument employed in making payments between countries. General journal is the simple and most flexible type of journal. General ledger is collection of all assets, liability, owners, equity, revenue, and expenses account. Gross income in the beginning point for the determination of income, including income from whatever source derive. Gross margin is the difference between net sales and cost of goods sold. Gross sales is the total amount of sales forecast and on credit and accumulated during a specific accounting period. Income is inflow of revenue during a period of time. Income statement is summary of the effect of revenue and expense over a period. Interest is a payment for the use or forbearance of money. Interest coverage ratio is a way of measuring degree of protection that a creditor has from a debtor's default on interest payments. Interest rate is an amount of money charged for borrowing money or paid for the use somebody else's money. Interim dividend is dividend declared and paid before annual earnings have been determined, generally quarterly. Interim financial statement is financial statement that report the operation of an entity for less than 1 year. Internal audit is audit performed within entity by its staff rather than an independent certified public accountant. Inventory, tangible property held for sale, or materials used in a production process to make a product. Investment income is income from securities and other non-business investments such as dividends, interest, etc. Invoice is bill prepared by a seller of goods sold of service and submitted to the purchaser. Job order is a customer order for a specific number of specially designed made order product. Joint return is a return filed by married taxpayer or surviving spouses. 150. Joint venture is when or more person or organization gather capital to provide a product or service. Journal is any book containing original entries of daily financial transaction. Journal entry is a notation is the general journal. It records single transaction. LIFO, according method of valuing into inventory, under which the cost of the last goods acquired are the first cost charged to expense. Ledger, any book of accounts containing the summaries of debit and credit entries. Ledger account, incomplete record of the transaction record in each individual account. Liability, debt or obligation owned by one entity or debtor or another entity or creditor payable in money, goods or service. 150. Liquid asset is cash equivalent and marketable securities. 158. Long bond the matures in more than 10 years. Long-term debt with maturity of more than 1 year from the current date. Long-term investment. An investment that management plans to hold from more than 1 year. Long-term loss negative counterpart to mana tuh? More than years. Counterpart to long-term gain as defined by the same legislation. 162 loss is excess of expenditures over revenue for a period or activity. 163 Management accounting is reporting designed to assess management in decision making, planning, and control. 164 Manufacture to make on process or a product, especially by using margin is excess of selling price over the unit cost. Margin of profit is relationship of gross profit to net sales. Margin cost is increase or decrease in total cost of a business frame as the result of one more or one less unit of output. Marginal tax rate, amount of tax imposed on an additional dollar of income. 169 Merchandise, item that can be bought or sold. Commercial goods. 170 Merchandise inventory, the goods on hand at any one time that are available for sale to customer in the regular course of business. 171 Net figure remaining after all relevant deductions have been made from the gross amount. 172 Net asset, excess of the value of security owned, cash, receivables, and other assets over the liabilities of the company. Net current asset, difference between current asset and current liabilities. Net income, excess or deficit of total revenue and gains compared with total expense and losses for accounting period. Net loss, the difference between expense and revenue when expense exceed revenues over a period of time. Net present value method, a capital investment evaluation method that discount future cash flows to their present value. Net sales at gross invoice amount less any adjustment for returns, allowance, or discount taken. Original cost in accounting costs associated with the acquisition of an asset. Output, an amount of something produced especially during a given period of time. Outstanding check is financial instrument that draws on the funds is an individual's PR business, bank, account but which has not yet been cashed or deposited by the pay. Periodic inventory system, a system for determining inventory on hand by a physical count that is taken at the end of an accounting period. Perpetual inventory, a system that requires a continuous record of all receipts and withdrawals of each item on inventory. Physical inventory, an actual account of merchandise on hand at the end of an accounting period. Present value, current value of a given future cash flow stream discounted at a given rate. Profit, profit positive difference. Profit positive difference that results from selling products and service for more than the cost of producing these goods. Profit margin, use the measure the percentage of each sales dollar at result in net income. Statement of cash flow, one of the basic financial statement that is generally expected accounting principles or GAAP record as part of a complete set of financial statement prepared in conformity with it. Statement of cost of goods manufactured, a formal statement summarizing the flow of all manufacturing costs incurred during an accounting period. Statement of owner equity, the financial statement that shows how and why owner equity or capital account has changed over specified financial period. The account, the simple form of an account. Tax, charge levied by a governmental unit or income, consumption, wealth, or other basic. Trial balance, a comparison of the total of debit and credit balances in the ledger to check that they are equal. Working capital is measure of a company's efficiency and its short-term financial health. 194. Closing entries are those journal entries made in manual accounting system at the end of an accounting period to shift the balance is temporary account to permanent cost. 195. Worksheet is a spreadsheet used to prepare accounting information and report. 196. Subsidiary ledger contains the details to support general ledger control account. 197. Purchase journal is a special journal used to record purchase made on credit. Trial balance is a list of all the general ledger accounts or both revenue and capital contained in the ledger of a business. 199. Cash receipt journal is used to record sales of merchandise for cash. 200. And the last drawing is the withdrawal of business cash or other assets by the owner for the personal use the owner. Thank you for watching for my 200 my accounting statement from Nia Andiani dari Universitas Pamulang. Thank you so much. Semoga bermanfaat.